Welcome. I thought it might be a good time to give everybody an update before you get busy with summer. There's a lot going on in the world and in the markets, and I'm sure there are people with concerns out there. There seems to be a lot of course, usual, negative information and those type of things. We can address those if you'd like, but let's look at some of the positives. So some of the positives include that we have the lowest unemployment that we've had historically, statistically. So I feel like that's a positive. And yes, the market is volatile, but low unemployment is going to make a long-term difference in the country. So we've got everybody that wants to work is working, and so that seems to be a positive. Other positives would be the wages are rising. Now the wages are rising and inflation is higher, maybe you say right now, but the inflation will go down and it will become lower. So when it does, and those wages have already risen, that will be a long-term positive effect for the future. Also, more employers are giving more benefits now, so those two will also probably continue over the long term after the inflation is over. When it comes to individual portfolios and those type of things, one thing about it is we're all diversified. The clients are all diversified, have diversified portfolios, and with those diversified portfolios, it's not a matter of timing the market, it's a matter of how much time you have in the market. So again, we're not going to be trading accounts quickly. I'll talk about going to cash in a few minutes, but there are some other positives about your portfolios that you might have. A lot of you will have individual mutual funds. Right now with individual mutual funds, a lot of them own dividend-paying stocks. So you're continuing to get more shares. Each quarter, if they pay out the dividends, you'll get more shares because the price is lower. So when the market goes back up, because it always goes back up, you'll have even more shares that you own. Some other things that might benefit some of our clients is that if you're retired and you're taking income, some of you have variable annuities with guaranteed income accounts. It's not fun to see the balance, but you can know that your income is always guaranteed. So that should also help with some of your concerns. So again, some people say, well, should we be moving to cash or money markets at this time? Our philosophy here is that we're long-term investors. Again, if you could time the market, there really wouldn't be a market. The times that you would get out of the market, 100% out of the market, there are two situations that I know of. Number one, you're never getting in the market again. So you're going to take all your money out of, like for example, I say if the price of bread's going up every year, you need to own part of the bread store. You're not going to do any of that anymore. You're going to put it all in a fixed account, and you'd be lucky probably to average maybe 2% over the long term if you're lucky. So that would be one reason why you would go all to cash. The only other reason why I think you would go all to cash is to buy back later when the price is even lower. So if you could get out now and be willing to get back in when the prices in the market goes down even a lot lower, then that's a strategy. But if you want to implement that strategy, then you'll be the one kind of letting us know when you're ready to go back in. Most people, again, that are concerned about the market can't get out and get back in when it goes even lower. So those are a couple areas how we address that. Market corrections, recessions, bear markets, they're never easy. They're not fun. We just need to be patient, stay invested, and continue to let the economic system work its way through. Personally, after 39 years in this business, seen a lot of situations, stock market crashes, wars, day trading, 2008, 9/11. A lot of things have happened over the last 39 years that are terrible, look to be terrible situations in our economy. And in each and every time, the American is going to continue to buy goods and services. They might just change what they're buying of the goods and services, but they're going to continue to spend money. And I think you'll see as we go along with this situation also that we'll work our way through it. And, basically, again, just be patient. If you have particular questions about your individual portfolio, then go ahead and give us a call, set up an appointment. We can go over your individual portfolio. We have implemented some strategies along the way that we think will benefit all of you. Also, we do have 3-year trends we looked at. We've moved some things for those that we think the next 3 years will benefit from. So again, we are working here for you. We'll continue to do our updates on a regular basis. Be proactive, watch your accounts, and be here just like we always have been so that you can trust us. Thank you again for your trust for all of us at Boyer and Sappenfield Investment Advisors. We truly feel that you are very valuable clients, and we want to do the best we can for you through the tough times and the good times. So thanks again. Just want to get in there, and everybody have a great summer. I love summer. We're going to be outside a lot, going to ball games and to the lake and watching the grandkids run around. So again, I hope you all have a very fun and healthy summer. Bye.